Welcome to News You Can Use, presented by Supreme Lending. News You Can Use offers timely information related to the housing and housing finance industry that we believe will benefit you and your customers. This is News You Can Use.
March was the month where the country woke up to the reality of coronavirus.
This morning, the number of cases of the coronavirus growing, the disease spreading.
And April has become the month where it's really sinking in.
All told, in just 2 weeks, nearly 10 million Americans have filed for unemployment insurance. Those numbers don't include the self-employed or the many Americans who've been trying to apply but can't.
Now to the economic health of the country. The Federal Reserve is taking sweeping action to try to protect the economy from the coronavirus. Fed Chairman Jerome Powell announced that interest rates will be drastically cut in one of the biggest Fed moves since the 2008 financial crisis.
The definition of hope is a feeling of expectation and desire for a certain thing to happen. I'm not a betting man, but if I was, I bet everyone in the audience today is hopeful for the same thing. And that is that we can someday, soon, return to our way of life. A way of life that maybe all of us took a bit for granted. I bet we won't if we could ever get back to that place. I know you share that hope with me. It says in Scripture that hope deferred makes the heart sick. Well, sickness was what we were trying to avoid when we decided to go down the road that we did, which in fact has changed our way of life, at least temporarily. When Corona first showed up, many of us, including yours truly, thought it was another version of the flu. We were wrong. When we found out it was a thing, and it was really called a pandemic, we traded our way of life intentionally for saving lives. We sheltered in place, we quarantined, we designated certain and only certain businesses to stay in business because they were essential, as if all jobs aren't essential. They didn't mean that. They were just, that is, the government making the decisions that they thought they needed to make to keep us from getting sick. Social distance became now a thing, a way of life. So did masks. In fact, today, if you don't wear a mask or keep distance, well, you get a bit shamed for not doing so. And that's really just a way to put in context the amount of change that's taken place to our way of life in really just 2.5 months period of time. Today, I'm here to give you an update again on what's happening with regards to the road to recovery, which is the event of how do we get back to that place. And we said from the very beginning that the things to watch, the reality of how we would monitor our way back, the road to recovery, there would be 3 things to really watch. There'd be monetary policy, and there would be fiscal policy, monetary led by the Federal Reserve, fiscal led by Washington, and all of those that are there representing us. And the final thing would, of course, be, the final piece of the puzzle would be the health policy regarding coronavirus itself. And so that's where we said that we would watch. Everyone had a role to play in the process. First things first, the Federal Reserve stepped up to the plate. They did anything and everything. And in fact, if you didn't see 60 Minutes last night, it's good to see it because the Federal Reserve Chair is saying that we really need to get to the health issue to solve that, to get the kind of recovery that he hopes for, that you hope for, that I hope for, that we all hope for. But the Fed has done everything they can possibly do. They've cut interest rates to zero. They've announced a slew of asset purchases. All of this in an effort to avoid the economy going to a really bad place. So it's in a coma today, and we're starting to wake it up and try to bring it back out. Let's go to Washington. Well, Washington, with regard to fiscal policy, has already done just short of $3 trillion. That's right, with a T, $1 trillion worth of support on a number of different programs to essentially either provide dollars for unemployed, just stimulus checks, give dollars away so people will feel like they can spend a little bit of more money when they get a chance to get out and spend a little bit more money. And they also gave employers dollars. hundreds of billions of dollars so that they could effectively maintain their staff while the patient was in a coma, the patient being the economy. So what's holding us back is essentially at this point, it's not the Federal Reserve and it's not Washington. In fact, Washington this past week, the House passed a new stimulus. Now, keep in mind, we've almost done $3 trillion so far. The House passed a $3 trillion stimulus. It's not going to get finally approved in that fashion, but there will be, it seems like, an additional stimulus coming up. And all of this was in an effort, again, when we put the economy in a coma, to keep it safe while it was in the coma and to give it the best chance once we got to solution from a health standpoint to recover. So what is holding us back? Well, initially, of course, it was almost everything related to health policy. We didn't have tests, we didn't have ventilators, masks. We were essentially unprepared for an event like this. We can all question why we were unprepared. The reality of it is because it hasn't happened in a very, very long time that we've had a pandemic like this, right? So to the extent that all of us in our own lives, oftentimes we don't prepare the way we should. Think about hurricanes, right? Sometimes we're prepared, sometimes we're less prepared. The bottom line is we've learned a very valuable lesson. It won't happen. Of course, we hope it won't happen another time around. But even the Fed now is talking about one of the ways for the economy to recover is to invest in tests, right? So they're on the health policy conversation with us because they realize, just like we do, that for us to get hope, to get our way of life back, we're simply going to need to have COVID-19 in a way that people can feel safe to go back to a more normal way of doing business. Now, of course, it's going to take some businesses a very long time to get back to normal. Think about airlines, think about restaurants and bars. To get to normal, we may need to finish the health policy with both a vaccine and also treatments that can shut down COVID if you were to contract it. But the bottom line is where we are today is that we're in the health policy process on every front, whether it's testing or tracing, tracking, or whether it's on treatments. We are working in every way possible, not only because we're past flattening the curve now. We've done a pretty good job at flattening the curve, particularly not on new cases because more tests are being done today. So we'll likely see cases go up, but particularly on those measures that matter most, and that is hospitalizations and deaths. On hospitalizations and deaths, we have not only flattened the curve, we're on the other side of the curve. And so that's why we're seeing a significant amount of transition in terms of the way we are thinking about the economy and beginning to wake it back up. And in fact, the majority now of the states have either reopened some services and businesses or are in the midst of doing so. Of course, there's been a big debate politically about following certain guidelines to do that. And there are plenty of people that will tell you their opinions. In fact, everyone has one on this topic. The reality of it is we have a sickness called corona. It's real and it's serious. And we have a sickness now called the U.S. economy. It's real as well. And both of them need to get healed. And our hope, my hope and yours, is that by getting COVID-19 under control from a health standpoint and all the activity that the Fed and Washington has taken, we will get this economy open again and running again. Again, the hospitalizations and the death numbers are the ones that we're going to be tracking going forward because we really feel like the number of new cases is indicative of possibly simply we have more tests. So a lot of people, as we know about this COVID-19, have been asymptomatic, meaning they have had it or they have it, but they did not get the symptoms that obviously some people have, including hospitalizations and, of course, those that have passed from it. So reality of it is that we're increasing testing, which is a good thing. Will make people feel more comfortable over time. But that's only one part of a multi-pronged health policy issue that needs resolution. So we'll be updating as our News You Can Use takes place. We'll be updating you with regard to hospitalizations and deaths going forward. And the good news is in both the state of North Carolina, Georgia, and Florida, we're seeing hospitalizations and deaths continue to move in the right direction. There's been all kinds of information about solutions, treatment solutions for COVID-19. In fact, there's been discussion about the Warp Speed, which is the code name for the project that the president has kicked into gear with regard to getting a vaccine before the end of this year. We've heard that we're going to have one. That was his commitment, President Trump. Of course, others are saying they're doing the best they can to get there. And the truth is, we just don't know, but there is hope. As of today, we got a really good news story. I'll show you a picture this morning of CNBC, and really the stock market is excited today. Why? They have hope. Investors have hope. A company called Moderna is reporting that positive data on early stage coronavirus vaccine trial. There's a number of trials going on right now, which is where the president is looking for one of those to emerge, or multitude of vaccines to emerge that give us a place to go before the end of the year so that people can get vaccinated, and that we could at least have a key underpinning of the health policy get in place. It usually takes 18 months to 2 years. That's what people are talking about. But in this particular case, because we all need hope, we've marshaled every resource imaginable. All the companies and experts in those companies are focused almost exclusively right now on how to get a solution for COVID-19. Vaccine, increasing testing, and of course, treatment. So if you get it, how can we use something like Tamiflu to minimize the impact? And so all of those fronts are being worked, which is really the health policy conversation. Let's talk about the economy. I told you the last time we talked that the numbers that we report for April, now we're in May, and for June, for the month of May, the next 45 days, the numbers on the economy are going to, remind us of just how sick we've made ourselves as a result of the decision to avoid additional sickness because of COVID-19. The most recent retail sales report, and think about retail sales as propeller on the back of the boat. That's about almost 80% of all of the economic activity in the United States is you and me as sales go out doing retail, bars, restaurants, clothing, any type, Netflix. We track sales. Anytime you spend money, I spend money, the cash register rings, and it is reported because it is proxy for where the economy is and where it's going. That is retail sales. And so this month we had a record drop of 16.4% in the month of April. It's not surprising. It is worse than was predicted. Predicted was about 12%. But I will tell you this, the numbers normally aren't, the predictions and the outcomes are normally very close together. But right now is not a time that an economist can actually get that exact, because we are in, let's just say, a very unusual, as they say, unprecedented time. And of course we are. We all know that. I mean, just go to the store and see everyone wearing masks and you'll know we're in unprecedented times. The industries that have been hit hardest, the subsectors, if you will, leisure and hospitality, those are things, because we are sheltering in place, or we were for a long period of time, those businesses that depend upon you getting out and going to restaurants and bars, getting on a plane and flying to another city, staying in a hotel, getting on a cruise ship this time of year. My goodness, none of those things have been happening. So those industries have been hit hardest. Construction has been hit as well. Many of these businesses effectively by state were shut down. So to the extent that you could do construction, well, a lot of states, in fact, the majority of states decided it wasn't an essential thing that needed to be done. So stay at home to try to solve for the sickness called coronavirus. So the bottom line is that we've had substantial numbers of increased unemployment, 36 million since we've been tracking this event in the last 7 weeks. The good news is we went really high and the curve has been flattened and we're on the way back down. But there's 36 million people that are essentially affected or sick in the economy now, and we got to get a solution so we can get them back to good health economically, right? So we're working on both fronts now, and there is hope, that we're making progress. CEOs in the month of April, in concert, the consensus voice was, it feels like we've seen the bottom, like we kissed the bottom and now we're on the way back up. If you remember, and we'll show it to you again, we want a V-shaped recovery. We went all the way down, 36 million jobs, all the way down. Retail sales down 16%. These are records that have taken place in 8 weeks. But we knew that when we put the economy into a self-induced coma, we knew that when we did that, we were going to have that event take place. And now we're hoping for the other side where we can actually see it come up. So it does feel like an awful lot of the CEOs in consensus were saying that in the last couple of weeks in April, we started to see a tick up. And you probably have felt that as well in the real estate business, because our data is telling us that we saw demand start picking up again pretty aggressively in the last couple of weeks. Certainly, we're not back to where we were BC, before Corona, but we are making progress on the way to recovery. The shape of the recovery, I wanted to show you again the slide that we like to share in terms of what the experts are talking about. We're going to get one of these, and we hope that we get the best one, which is V. That's the immediate bounce back, and we should see whether or not we're going to get a V by the time we finish June. The next 6 weeks are critical through Memorial Day and then through the month of June. Why? Because the states have just reopened, many of them, and others are following now, including New York is talking about opening some services and then opening some additional services into the month of June. So as we start allowing people to go back to work and go back to their place, being able to have the freedom to get out of their homes and go out, as we do that, we're hoping to see demand start picking back up again and we get this V-shaped recovery. Of course, we're hoping that we get some really good news on Corona from a health policy standpoint, because in combination, those two things would be fabulous. In fact, we would see a tremendous recovery if we get some really good news on the coronavirus front itself that gives us hope that down the road we'll be much safer from this virus. The U is linger at the bottom some for a while and then bounce back. And by the way, if we didn't have the V, I'll take the U because bouncing back is what we all hope for. We don't want the L. My wife's name's Lisa. I love Lisa, and I love the fact that her name begins with an L, but I do not like it with regard to this story. Because the L is we go straight down and then we just stay down. And that's not really the outcome that any of us are hoping for. And then finally, the swoosh. Again, I don't know how Nike got in on the action, but a brilliant marketing organization. They always seem to get in on the action. Well, they've gotten themselves in now to where they actually have created a new letter apparently in the alphabet called swoosh. It's not really a letter. But anyway, it's the crash and measured recovery over time. Reopening the economy. We did it in Georgia about 3 weeks ago, and so far so good. Of course, again, it's not normal, but we are moving towards trying to find our way back to how to be normal in the new normal, because there are a ton of regulations about what it needs to look like. And I guarantee you, as we said from the very beginning, this is a dynamic and a fluid story. Those regulations will continue to evolve as the data, information related to hospitalizations and deaths continues to tell us the direction of this virus. Keep in mind that oftentimes, we don't know about Corona, but oftentimes summers, the weather does quiet these types of viruses. So we'll hope that's the case. this summer, because that'll give us a window of opportunity. But then health policy still has to emerge as the final piece of the puzzle to ensure a V-shaped or a U-shaped economic recovery. The new normal, Broward, Miami-Dade County and South Florida are reopening today, actually. And we're getting news about North Carolina as well, the markets that we all serve. So Georgia was first, and now we're seeing the final stages of opening in Florida and North Carolina getting on. Again, reopening, it's not a one-size-fits-all. So each state, depending upon the kind of economies that they have, not only will they reopen at different times, but their recoveries will be different. So it's not all states will be the same in terms of the decision to reopen, the driving forces behind it, and then recovery. It'll be based on the kind of industries that one is in until we get the final solutions on the health policy side. Testing, treatment, vaccine will help. Of course, they'll help. They have to be upgraded. Testing and access. Treatment is a big, we all could do so much better if we simply knew that if we contracted COVID, that we wouldn't have to have a hospital visit. We would just have a flu. None of us want the flu, but if that's the worst of it, that we just had the flu, and 99.999% of folks recover from the flu, then I think we would be good. And of course, vaccine is a big deal because that'll feel or give us a sense that we can avoid it altogether. Even when businesses open, the question has been, will the employees return? There's been a lot of debate about that because of the unemployment subsidy, which was in my mind the right thing to do to make people feel better. That is that there's a number of Americans today enjoying making more money not being employed than when they had their jobs. But the reality of it is that was a conscious decision that we made within the stimulus called the CARES Act, and we wanted people to feel a sense of confidence while this was going on, to mindset-wise keep people feeling okay, so that when we did get to a reopening, which we're now getting to, that they would return because we would all see a return to normal, and maybe if they just have a few extra dollars in their pocket. No harm in that, because those dollars can help propel the V, which is what we want. The big issue is, will customers return? Because in the end, if you don't return and I don't return as an active customer, and I want you to hear this loud and clear, don't want you to take any risk at all on your health. But we all need to help and go back and really become consumers again, because we need the economy to get restarted so that 36 million people who were either furloughed, which is better than being unemployed, but is not as good as being employed, or unemployed, that they can find their way back into getting jobs. And that's really something that is, in the end, you and I are the consumers, and we're the propeller on the boat. Unless we go out and spend our dollars, we're not going to see the V-shaped or U-shaped recovery that we're all hoping for. Employee and customer safety paramount. We've got an awful lot of, new things to do now because of this. But I'll tell you what, there's going to be a lot of thermometers sold. There's going to be a lot of cleaning equipment sold. Cleaning companies will emerge that'll be COVID experts. I mean, there'll be an awful lot of new businesses, because that's what we do in this country. We innovate and find a way, and I'm sure that there'll be new businesses that will effectively be started, because some businesses may not return, and some businesses may be permanently changed. We don't know all those things. We hope everyone goes back to the best way of life, but to the extent that we're going to see some things change, of course we will. And I believe that your business, my business, many new businesses will adopt better practices and new ways to do things as a result of COVID. And for the best, the ones that are going to be the best, we all do that. We find a way not to complain about things like this. We accept reality, and then we move forward, and we find a way to get better. All right, let's move into housing finance. Good news, very good news. The housing market is bouncing back, and more news like that has been taking place every week. Last week, mortgage applications from buyers, not refinancers, jumped 11%, signaling that the spring housing market, it may not be a total loss. We may be able to catch it and catch a really better than expected summer market. Certainly, we had a 3 or 4 week period because of the event that shut down more or less housing. Completely shut it down? No, but it definitely tamed it. And now we're turning, even with 36 million people unemployed, it's showing great resilience. That is, consumers are, because the demand is still now climbing again. And I think that's because people have hope. And they have hope because we started to open again our economy. And I think people that do have jobs, still have jobs, are thinking, okay, I wanted to buy a house. The economy's opening back up. We're on the other side, either of the V or the U, because we don't want to talk about the L. And the swoosh, we've already talked too much about. All right. So Homebuilder Sentiment, another important idea. It increased again. It's still below a standard for a strong housing market for sure. But we saw another improvement take place just recently. In fact, today we reported, or was reported, that the sentiment really kicked into gear again. So we're starting to see it climb off of the bottom again, that V shape or that L shape. It feels like we're on the way back on a number of different fronts. We'll look forward to the next 2 to 4 weeks reports confirming that the shelter in place going away, the quarantining go away, the reopening of many economies around the country, that we'll start seeing demand for all services come back. And of course, it'll take some time for us to get back to our way of life, normal, if you will. But if we're on the way, it's not where you are that matters, it's where you're going. Hope is in the where we're going. So we'll just hope that we continue to see progress made on the overall economic front. Forget flattening. We need to get this thing to turn and go up, whether it's with employment, or whether it's with retail sales, or whether it's with housing sales. Let's talk about our business a little bit, the housing finance business. We've brought to bear the idea of forbearance as an issue. We're now up to about 7 million homeowners in America who have selected forbearance as a way. It has slowed the number of people calling, and that's consistent with what I just shared with you. As we've kind of hit rock bottom and are starting to get better, the need to use programs like forbearance, which again is not forgiveness. I've said that over and over again. All it does is basically allow for a consumer to be able to talk to their loan servicer, their mortgage loan servicer, and say, hey, listen, I've been impacted by Corona, my job, hours cut, lost my job, been furloughed, concerned. They will either, then the servicer, delay 3 payments, 6 payments, or 12 payments, back them onto the back of the loan. There's all kinds of technical ways to restructure that. But in the end, it's a way to give a consumer a breathing room while we go through this self-induced economic coma, right? So that's why the government decided to do forbearance, or offer forbearance, because they really felt like, since consumers had nothing to do with the decision to shut down the economy, we should give them some relief. And of course, I'm an advocate of what we've done so far in terms of all of these policies, because are they perfect? No, none of them are. But in fact, they've been decisions that have been essentially necessary to get us to a point where we can turn the economy back on, hopefully get this thing to recover quickly. There's been impacts in both the jumbo marketplace in terms of financing and financing opportunities, and we've told you that, and as well in FICO scoring. And those two things have not gone away. The good news is we're not seeing continued deterioration of financing conditions in our industry. In other words, the moves to tighten credit in the jumbo market and the moves to tighten credit with FICO scores have at least stabilized. And we'll hope that as long as we see economic recovery continue to take place, we expect that that stabilization will in fact hold. We won't see a retracement, if you will, of back to the same type of financing maybe that was available BC, before Corona, right away. But over time, possibly, we will see some easing. We tightened right away, both in terms of jumbo financing and FICO scoring. And now we're entering that mode where we've stabilized, which is better to be stable, because we cannot, it's like the bottom of the V. You cannot go up until you've stopped going down. The bottom of the U, you cannot go up until you stop going down. So the same thing holds for housing finance. So the good news for those in forbearance is that they're furthering the conversation now to say that it is not going to be a negative impact on your credit. I will tell you that over time, however, it will be reported, not as a late payment, but it'll be reported on your credit, and creditors have the rights to look at those types of things and decide for themselves what they think about that in terms of credit. So on the margin, it isn't a good thing for your credit. They're affirming that it won't be a bad thing, and we'll let the government sort this out down the road. They may indeed tell people legally, companies like ours, that you cannot consider it as part of the credit. So we'll wait. That's not an issue we have to deal with today. On the jumbo topic, there are still jumbo financing available in the marketplace. It's just harder to get these days than it was 3 months ago. So we'll do a upcoming program just on the jumbo marketplace to make sure that you as realtors, those that work in the jumbo community, understand the portfolio of offerings that are available. And so we'll look forward to doing that just so you can get fully informed. Now that the market is stabilized, we think it's worthwhile to offer you that. We've talked about, and I want to update you with regard to a program we put together in response to the FICO scoring issue, and that is Credit Essentials with Home Buyers with Lisa Myers. We run those Friday at 1 o'clock. Every Friday at 1 o'clock, you can take a potential home buyer of yours that you refer to Supreme, and they are invited to a 30-minute program where Lisa Myers, who's one of the top experts in America on the topic of credit specific to the mortgage industry, she will share in a 30-minute program how generically all of us could improve our credit score without spending money, just how we can do it. There's also ways you can spend money to improve your credit score by paying off some debt, things along those lines. But Lisa's there as an expert to help every one of your potential consumers do two things. One, stay or get in the club of being able to buy a home by getting their credit score high enough and or keeping it high enough to be able to buy a home. So that's the first thing. The second thing that we intend to do with this program is to reduce the cost of credit, because bottom line is, if we increase the credit score, the cost of credit comes down to every consumer. You could be today at 3.5% fixed rate, or you could be at 4%, and it could be solely based on your credit score. If you're at a 640 credit score or you're at a 740 credit score, the range of cost is just that high. So we feel like it's a great program. We've had attendance of over 100 people now on average in our first 4 weeks. We're really excited about it. This is the slide that I showed you that basically talks about the cost of credit. And so, again, it's substantial cost upfront at closing, and then it's also a cost on an ongoing basis if you have private mortgage insurance, which about 40% of the mortgages that we do have private mortgage insurance. So there's a great opportunity to really to improve, if you will. The bottom line is get better with regard to your credit score, and you'll wind up improving the cost. And most importantly for you and I, they will stay in the market as home buyers, which is critical. Fannie Mae's housing forecast, they've just updated their forecast. And the good news is they've not deteriorated their forecast from the last time we've shared. So Doug Duncan, our good friend, has just sent us the update, and we now are seeing that the numbers are relatively the same. We're about 14% decline for the year, for this year, from 2019. That was his most recent forecast as a result of Corona. It's down now 14.7 on the margin. It's almost insignificant, the change. And next year, still optimistic about a 14% increase. The good news, hope, is that this quarter then will be the weakest quarter for housing, the one we're currently in. The third quarter, starting July 1st in the United States, and the fourth quarter of this year, and then all 4 quarters in 2021 will be better, the number of sales, than the current quarter we're in. So it's really good news in terms of him not deteriorating his forecast at this point. We'll update you again here in the next couple of weeks as he updates his forecast. And you know what Doug's looking at? Doug's looking at the same thing we're looking at, except he's a lot more sophisticated in looking at. He's looking at job losses or gains, hopefully coming up here soon. He's looking at retail sales. He's looking at home builder sentiment indexes. He's looking at all the data points that tell us that the reopenings are going well. And of course, he's also monitoring, like we are, the COVID conversation, because as I showed you earlier, all we received today was hope. News that there's a potential vaccine has the stock market on fire today. So that's what we expect will happen in the overall economy. That's why they're predicting a V if we can get a solution to COVID. And of course, we're not anywhere close to getting a solution yet, but people generally hope deferred makes the heart sick. We don't want to be sick. We want to be healthy. And so we got to keep hope. And fortunately, the news gives us a chance to do that today. I shared with you that demand, it feels like it's picking up. I wanted to update you on our credit pulls. And by the way, for all of you, when you refer a customer, thank you. When you do, we take first steps to pre-qual and pre-approve that customer. Pre-qualification is we pull their credit to get a sense for where they're at, to make sure they're eligible to buy a home. Of course, that's why you refer to us, because we want to be experts to give guidance to those consumers. And so the demand for our services is at a high all-time for our company. And in fact, it's up about 25% versus the same period for last year. So really, we lost some flight for a couple of weeks, the end of March and in the first week to 2 weeks of April. And since then, we've been on an incline from a demand standpoint. And you're probably seeing that as well. Contracts to buy homes actually have picked up in the last couple of weeks, certainly at levels that are lower than we were enjoying BC before Corona, but we're starting to see improvements. I want to now just shift again to our advertising section of the program. It's not really advertising. I just want you to know that we design everything we do at Supreme to serve you and to serve your customers. So this entire program today is designed to offer you insights that you can share with your consumers. Credit Essentials, the program that Lisa's on Friday, is designed to offer you and your consumer opportunities so your consumer can improve their credit score, reduce their cost, be buyers, right? The Supreme Rescue Service operates in a simple way. If you're involved in a transaction, or you know a realtor is involved in a transaction, and the financing becomes a problem for whatever reason, we have SRS, Supreme Rescue Service. You can simply contact one of your Supreme LOs, loan officers, and we will give a second opinion to the transaction. And we believe in a lot of cases we can find a way to structure and to bring that financing to bear. A lot of the bigger companies, particularly the bigger banking companies, no disrespect, they just aren't very creative to solve some of the problems that take place in the financing marketplace. And we feel like we have the very best people in the country to be able to assess, the best mortgage doctors, if you will, to be able to assess the scenario. And then if we get a scenario where we feel like, yes, we can get that done and we can rock in a hurry, because Supreme is fast. Our speed is amazing. We are still offering services to close this month. That's right. If you have a transaction, we can still close this month. We do it all the time. That is 8-day closings. The government will not let us close in 7. So the fastest we can close is in 8 days. So we're still open to close this month. And of course, like never before, all these transactions, they always have mattered, but they all matter more than ever before. And so to the extent that you've got one that's stuck someplace and we can help get it unstuck through the Supreme Rescue Service, then we could put it in our pipeline and we can wind up getting you to a closing table and your customers to a closing table and sellers to a closing table in 8 days. Our SAT rates are through the roof. They're actually higher than the Ritz-Carlton top box, which is raving fan SAT rates. We're in the high 80s now, which we continue to pursue perfection. 100% would be our target. We do the best we possibly can to get there, of course. And we measure also close on time, fund on time, to get you paid on time. Why is it important for us to measure close on time, fund on time? You know why? Because when people are moving, they need the money to be there so they can transact with the seller and move that day at that time. And you want to get paid on time. So it's a really simple idea. And in 99+% of the cases, we actually close on time. I've covered speed already with you, and that is at Supreme. We feel like is the fastest in America at doing what we do. Not fast without being good, because we care greatly about leaving people with the experience that is our inspiration, and that's to deliver the industry's best customer experience. I wanted to tell all of you today that I am personally hopeful. As we go into what is normally an amazing time of year, we kick off summer with Memorial Day. Look, we missed graduations this year. We missed the Masters this year. We've missed a lot of things already. Our way of life has been changed. The last 8 to 10 weeks it's been unprecedented as that word continues to get associated with what's going on. But today, I have more hope than I've had in some time, and I'm a hopeful fellow. And I am because we finally got to the bottom, and we're starting to work our way out. And I am hoping and I am praying. And for you that are out there that do pray, I ask you to join me in praying that we not have a relapse, that we continue to open smartly and wisely, so that we continue to get outcomes where we're making progress and moving closer to the solution that you want and I want and that we all hope for. And that is that we return to our way of life in America, and that the 36 million people who have become unemployed at some level or furloughed, that they get welcomed back, and that all of Americans are deemed essential. So that's what we're all hoping for, and that's what I'm praying for, and I ask you to join me in that prayer. This is another News You Can Use program, and I thank you for watching today, and I will look forward to giving you an update Monday at 3 p.m. Have a great week.
Welcome to News You Can Use, presented by Supreme Lending. News You Can Use offers timely information related to the housing and housing finance industry that we believe will benefit you and your customers. This is News You Can Use.